Good day. In this video, we will look at the framework for calculating normal tax payable or refundable. In the previous video, we looked very broadly at the calculation of taxable income. The calculation of taxable income is what this module is all about, and concepts and content will be added to this framework. So it's important that you know the framework very well so that you can add new knowledge in the correct place on the framework. After calculating taxable income, the normal tax is calculated by applying the tax tables. So these are tax tables as provided by the Minister of Finance each and every year. So these are updated on a yearly basis according to the budget speech. Normal tax is reduced or made smaller by applying respective rebates depending on the age of the taxpayer. So those rebates could be your primary, secondary, or tertiary rebates depending on the age of the taxpayer. It also includes your medical tax credits as well as foreign tax credits if applicable. Right. We refer to the amount after the reduction of the normal tax according to the tax tables as the normal tax liability. Okay. We then reduce the normal tax liability by any tax that has been prepaid by the taxpayer, like your employee's tax or your provisional tax. This will give us the taxpayer's normal tax payable or refundable. That is, whether they still owe SARS or if SARS should refund them some of the prepaid taxes. If this amount is negative, it means that the taxpayer paid too much prepaid taxes during the year and that SARS must refund them some of the prepaid taxes. If the amount is positive, then it means that the taxpayer did not pay enough prepaid taxes and still owes SARS more tax in respect of the year of assessment. Right. Now, as a quick recap, remember your taxable income. This is as per the previous slide. So there's certain steps that would be your gross income, less your exemptions, less your deductions. You get to your taxable income in brief. It is very important for us to know the different or the specific terminologies. And this is important for assessment purposes because you need to understand exactly what is being required from you. Are you required to calculate the normal tax? Or are you required to calculate the normal tax liability? Remember, if you are required to calculate the normal tax, it means you will take the taxable income and apply the tax tables. That's all you're doing. However, if you're required to calculate the normal tax liability, what you will do is you will look at the normal tax that was paid or the normal tax according to the tax table and reduce that by the primary rebates or any applicable rebates, primary, secondary, tertiary, medical tax credits, or foreign tax credits, right? So that is what the liability of the taxpayer is. It is the normal tax according to the tax tables less the rebates. That is the normal tax liability, right? And on the other hand, if you are required to calculate the normal tax payable or refundable, you will need to start with the normal tax according to the tax tables, then get to the normal tax liability, that is reducing your normal tax with the rebates, and then lastly, you will have to reduce the liability by the prepaid taxes, that is the employee's tax or the provisional tax. And that will get you to an amount of normal tax payable or refundable. So please take caution in terms of what is being required. If you are only required to calculate the normal tax, you don't need to go through all these other steps, meaning you would be wasting your time if you do everything that is not required. If you are required to calculate the normal tax payable or refundable, it means you need to go through all the steps. Right. And then that brings me to the end of this very short video. I hope it assists you. Thank you.